Hey, what's up? Um, Today I'm gonna explain what a fair value gap is and how I trade the fair value gap. Fair value gap is a really good confluence that I use basically every day when I'm trading the markets, and I think everyone should learn what the fair value gap is. It's really simple to be honest. So basically, to start off, what the fair value gap is, it's basically just this gap right here between three candles. It's a three candle pattern, so it goes from the high of this candle to the low of this candle, and the area between here is a fair value gap. You can see here you have the low from this candle to the high of this candle. That's a gap. That's what a fair value gap is called. And essentially you have two different types of fair value gaps. You have the bullish one that goes like this. This is the bullish one. When price taps into this, we believe it's going to go up again, and it is the bearish one. So alright, let's take a look at some real market examples. So we can start off with this is good practice for everyone that wants to learn what the fair value gap is to just go ahead in the market and we can mark out. So we can see instantly right there we have a gap between the high of this candle to the low of this candle. So this will be a fair value gap. We can continue back. We can see we have from the high of this candle to the low of this candle, and this will be the bearish fair value gap. So as you see here, when price comes in to this zone, it goes down again usually, and we can go back. We have a bullish fair value gap here. You see price goes down into the fair value gap and it goes up again. It's a really good confluence. I use it every single day in my trading, and I think everyone should learn what the fair value gap is. You can see here it's a three candle pattern. It's really simple. You have from this, the high of this, the low of this. What's not a fair value gap is like here. You see here, this is not a fair value gap, because you see how the wicks are overlapping. It can't be overlapping. The wicks has to create a gap. As you can see right here, it's a gap. Like this is not the fair value gap. This is like a really small fair value gap. Like even this is a small fair value gap, right? Because you can see right here, it's from the low of this to the high of this, and this is a bearish fair value gap. As you can see, price goes down into this zone and it goes down. So now I'm gonna show you an example from a real trade I took today where I used the fair value gap. Let me go right here. So I used the fair value gap on an entry of this trade. It was my entry confluence. You can see, hold up, let me remove this. You can see right here that if we look over here, you can see that this is a fair value gap. It's a bullish fair value gap. You can see it goes up here, price goes up, or you can see we have from the top of this candle to the bottom of this candle. You can see price goes down into this and just shoots up. So today in my trade, this is a trade I took today. I have a trade recap on it. I used the fair value gap as my entry model, and you can just like go back and you can find so many examples of the fair value gap and it being used, you know. Like let me see, like for example, this is not a fair value gap. This is not a fair value gap because you see how it's overlapping, right? It has to be a gap like this is a fair value gap, from the high of this to the low of this. And you can see here, like for example, this is a fair value gap again, from low of this to the high of this. It's a three candle pattern. Only three candle matters. Is this the bottom one, the middle one, and this one. And you can see here, price goes into the fair value gap. This is a bullish fair value gap. Price goes into the value gap and shoots up. Let me find an example of a bearish fair value gap. This is a bearish fair value gap. You can see here we have these candles here. It goes here, bottom of this, or the high, bottom of this to the high of this candle. It makes a gap. Price trades into this gap and rallies down. It's really simple. It's one of the best confluences that you can use to be honest. And of course you want to mix it with other confluence like liquidity sweeps and order block, but learning the fair value gap is a great start when you start trading. So if you want to learn it, all you do is like just hop on the charts and start practicing, marking it out like this. Here we have one here, and once you can like easily spot all of this like I do, really easy, just running around spotting it, it becomes really easy. You see, 3 candle pattern. Here we have a bearish one, we even have a bearish one here. You can see from the bottom of this candle to the high of this candle, price goes into here and rallies down. It's really simple. So yeah, that's it. If you're wondering like about any other confluences, just ask me in the comments, or if you have any questions, I will be answering. Just go ahead and like practice here, spotting every fair value gap. And yeah, once you practice enough, it will be really easy for you to spot all of the fair value gaps.